Imagine waking up tomorrow and discovering that all the money you own is no longer in your bank account, but in a digital wallet controlled directly by the government. Not by a private bank, not by a fintech company, but by your country's central bank. Every cent you earn, every purchase you make, every transfer you execute is recorded in a system that not only knows your habits, but can, if it wants, decide where, when, and how you spend. It sounds like science fiction. It sounds like conspiracy theory exaggeration. It sounds too far-fetched to be true, but it's not. This is already happening. And it has a technical, cold, bureaucratic name that hides a silent revolution in the most basic concept of human civilization: money. That name is CBDC, an acronym for Central Bank Digital Currency. And if you haven't heard about this yet, or if you heard and thought it was just another harmless technological innovation, you need to understand what's really at stake here. Because we're talking about the biggest transformation in financial power since governments removed the gold standard from national currencies.
Think about the money you use every day. Paper bills, metal coins, bank transfers, instant payments, credit cards. All of this seems to work fine, right? So why are governments around the world spending billions of dollars to replace the system with something completely new? Why is China already testing the digital yuan on a massive scale? Why is the European Union developing the digital euro? Why is Brazil, through its central bank, advancing with the digital real project? The official answer is always the same: efficiency, financial inclusion, combating money laundering, modernization of payment systems. But is that all? Or is there something much deeper, much more dangerous, much more revealing about the nature of power when we talk about who controls money? Let's start with the obvious. Money is power. Whoever controls money controls behavior. This is a truth that runs through all of human history, from the first coins minted in ancient Lydia to the algorithms that today decide whether or not you can get a loan. But traditional money, even the digital money we use today, still maintains a fundamental characteristic that we've inherited from centuries of monetary evolution: a certain degree of anonymity, a certain independence, a certain freedom of use. When you withdraw cash and buy something at a market, nobody needs to know. When you make a bank transfer, the bank knows, but the government isn't monitoring in real time, can't automatically block it, can't program that money to only work in certain places or on certain dates. These limitations of the current system, which most people have never stopped to think about, are actually protections that are about to disappear. CBDCs change all of this because they're not just a digital version of money that already exists. They're a completely new architecture where each monetary unit is a traceable, programmable, and controllable token by the issuer, which is the central bank, which is the government. And here's the point that very few people are understanding. Programmable money means money with embedded rules. It means the government can create money that expires if you don't spend it within a certain time frame. It means they can create money that only works to buy certain products, or only works in certain regions, or only works if you've met certain conditions. Does it sound abstract? Then think of it this way. Imagine the government decides it wants to stimulate consumption of national products. With a CBDC, it can simply program a percentage of your income to only work for purchases from Brazilian companies. Or imagine there's an environmental crisis and the government wants to reduce meat consumption. It can program your money to not work at butcher shops. Or imagine you criticized the government on social media and someone decided you represent a risk. Your money can be frozen instantly without a court order, without appeal, without explanation.
You might be thinking, but that's explicit authoritarianism. No democracy would do that. And that's where the most subtle danger of CBDCs lies, because they won't be implemented with these functionalities from the start. No government will announce, "We're creating a system of total control over your financial life." The implementation will be gradual, seductive, full of apparent benefits. It will start with convenience, instant payments, no fees, integrated with public services. It will continue with inclusion. People without bank accounts will be able to have a free digital wallet. It will be sold as security, automatic fraud tracking, theft protection, combating organized crime. And each of these stages will seem reasonable, will seem like progress, will seem inevitable. But what's being built, brick by brick, is a control infrastructure that, once complete, cannot be dismantled. And here comes a question that should be on the mind of anyone who values freedom. Why do governments want this level of control so badly? The answer isn't just in political authoritarianism, it's in something more fundamental, more urgent for those who manage modern economies: debt. Governments around the world are broke. They're sustaining unsustainable welfare systems, pensions they can't pay, debts that only grow. And the traditional mechanism for dealing with this, which is printing money and generating inflation, is becoming politically impossible because the population has already understood the game. So, what do you do when you can no longer print money without popular revolt, but also can't stop spending? You need a new control mechanism. You need a way to ensure that the money you create is spent the way you want, at the speed you want, in the places you want. And that's exactly what CBDCs allow. There's another aspect that almost nobody is discussing, but which is crucial to understanding the timing of this global movement: cryptocurrencies. Bitcoin, Ethereum, and thousands of other private digital currencies proved that decentralized digital money is possible, that people can transact value without intermediaries, without banks, without governments. And this terrified central banks, because if a significant portion of the population starts using cryptocurrencies for everyday transactions, the government loses control over monetary policy, loses the ability to tax, loses visibility over the economy. CBDCs are, to a large extent, a response to this threat. They're the government version of cryptocurrencies, taking the technology but completely reversing the philosophy. Where Bitcoin is decentralized, CBDC is centralized. Where Bitcoin is anonymous, CBDC is traceable. Where Bitcoin is censorship-resistant, CBDC is controllable by design. It's almost as if governments looked at blockchain technology and thought, this is incredible, but let's use it exactly opposite to its original purpose. Now, you might be wondering, but how exactly does a CBDC work? How does a government implement this in practice? And this is where things get technically fascinating and politically terrifying at the same time. A CBDC is not just a digital bank account you already have. It's a system where each real, each cent you own, exists as a direct record on the central bank's balance sheet. Today, when you have 1,000 reals in your bank account, that money is actually a debt the bank owes you. The bank owes you 1,000 reals, but the money itself is circulating in loans, investments, fractional reserves. With a CBDC, those 1,000 reals are yours directly, recorded in a digital ledger maintained by the central bank itself. Sounds better, doesn't it? After all, you have your money directly with the highest authority without the risk of the bank going bankrupt. But wait a minute, if the central bank is the one maintaining the record of every real you have, it can also see every real you spend, every transaction you make, every financial behavior pattern you exhibit. And more importantly, it can interfere in each of these transactions if it decides this is necessary.
Let's be more concrete. Imagine the government announces an economic stimulus program. Instead of sending money to your bank account and hoping you'll spend it, it can send CBDCs programmed to expire in 30 days. If you don't spend it, the money literally disappears. This forces consumption, stimulates the economy the way the government wants, but at the cost of completely eliminating your freedom to decide whether you want to save or spend. Or imagine there's a public health crisis and the government decides that gym memberships and healthy eating are national priorities. Part of your salary can be converted into CBDCs that only work at gyms, health food stores, medical appointments. Does it sound paternalistic? Does it sound invasive? Of course it does. But the political logic is simple. If the government pays for public health costs through the health system, why shouldn't it have the right to influence your lifestyle choices? It's a slippery slope where each argument seems to have a certain internal logic, but the end result is the complete dissolution of individual financial autonomy. And there's a technical detail that makes all of this even more concerning: speed. With traditional money, even with digital bank money, there's friction. There's time between a political decision and its practical implementation. The government decides to freeze someone's assets. It needs a court order. It needs communication with banks. It needs procedures. With CBDCs, execution is instantaneous. An algorithm can be programmed to automatically freeze the digital wallet of anyone who fits certain criteria. It could be criminal criteria. It could be political criteria. It could be social criteria. And the affected person doesn't even need to know the reason. They just wake up and discover their money no longer works, without immediate recourse, without explanation, without time to react. This speed of control is something completely new in human history. Governments have always had power over money, but they've never had instant, granular, programmable power over every monetary unit in circulation. Now, let's talk about something that CBDC advocates love to mention: financial inclusion. The idea is that billions of people in the world don't have access to banking services, live in the informal economy, can't fully participate in the financial system, and CBDCs would solve this by giving anyone with a cell phone a free digital wallet without the need for a bank account, without bureaucracy, without costs. Sounds beautiful. Sounds humanitarian. Sounds like social progress. But here's the question nobody's asking. Include these people in which system exactly? If you live today in the informal economy, receive cash payments, make transactions that nobody tracks, you have problems accessing credit and services, yes, but you also have privacy, you have autonomy, you have certain protection against state surveillance. When you're forcibly included in a CBDC system where every transaction is tracked, where every cent you earn and spend is permanently recorded, were you really included or were you captured? Financial inclusion via CBDC may be, in practice, the largest expansion of mass surveillance in history, sold as progressive social policy. And this brings us to a crucial point about incentives. Why are so many governments of different political ideologies, of different levels of development, all advancing with CBDCs at the same time? Communist China, Social Democratic European Union, capitalist United States, developing Brazil. All are building versions of this system. It's not a coincidence. It's because the incentives are the same for any government facing the same structural problems: growing debt, aging population, unsustainable promises, and the need to maintain control over increasingly complex and globalized economies. CBDC is the perfect solution to these problems because it centralizes power precisely when power was beginning to decentralize through technology. It's the last attempt to keep the centralized control model working in a world that technologically could already operate in a much more decentralized way. There's also the issue of privacy, which is where the contrast with gold becomes most obvious. When you have physical gold, you have absolute privacy. Nobody knows you have it, nobody knows when you exchange it, nobody can confiscate it without physical force. With CBDC, you have zero privacy. Every transaction is recorded forever. And here, someone could argue, but I don't do anything wrong, why would I care about privacy? This is the classic fallacy that authoritarianisms love, because privacy isn't about hiding crimes, it's about maintaining dignity, autonomy, and protection against abuse of power. It's about not giving the government the power to know if you bought medicine for depression, if you donated to a certain political party, if you bought books on a certain subject, if you traveled to a certain place. All of this information, aggregated and analyzed, builds a complete profile of who you are, what you think, what you believe, and that profile can be used against you in ways you can't even imagine today, especially if the government changes, if political priorities change, if what's acceptable today becomes suspicious tomorrow.
And here we arrive at a devastating historical irony. For decades, Western governments criticized China for its social credit system, where citizens' behavior is monitored and scored, where those with low scores lose access to services, to transportation, to opportunities. The West looked at this with horror as the ultimate example of a totalitarian state. But what are CBDCs if not the perfect infrastructure to implement exactly the same system? You don't even need to call it social credit. Just program digital currencies to work differently depending on user behavior. Just create incentives embedded in the money itself. Just use transaction data to feed algorithms that decide who deserves credit, who deserves benefits, who deserves access. China was a pioneer in centralized digital surveillance, but CBDCs are the path for the rest of the world to achieve the same result, with a more palatable, more technical, more economically justifiable disguise. So what happens when this system is fully implemented? When physical money is gradually eliminated? When CBDCs are the only option? When the entire economy runs on this infrastructure of total control? The answer depends on who's in power and what their objectives are. In the best-case scenario, governments use this power with moderation, focus on genuine efficiency, resist the temptation of excessive control. But human history isn't exactly full of examples of governments that, having absolute power, voluntarily chose not to use it. What's more likely is that control increases progressively, that each crisis is used as justification for new monitoring and restriction functionalities, that financial freedom is slowly eroded until nobody remembers what it was like to have true autonomy over their own money. And it's exactly here that the contrast with gold becomes not just relevant, but essential to understanding what's at stake. Gold is the money of freedom because it's physical, it's yours, it's private, it's immune to programming, it's immune to digital confiscation. CBDC is the perfect opposite: digital, controlled, tracked, programmable, confiscatable with a click. It's not an exaggeration to say we're facing a civilizational choice between two completely incompatible models of how money should work. One model values individual sovereignty, privacy, resistance to centralized power. The other model values state control, forced transparency, centralized power over every aspect of economic life. And most people aren't even aware that this choice is being made now, at this moment, while central banks silently advance with implementations that will shape the coming decades. The final question you need to ask yourself is, in which world do you want to live? In a world where your money is truly yours, where you decide how, when, and where to spend, where your financial life is private and autonomous? Or in a world where every transaction is monitored, where the government can program your money to do what it thinks is best, where your economic freedom exists only as long as you behave in the way central power approves? CBDCs aren't just a technology, they're a political statement about the relationship between individual and state, about who should have power over the most fundamental resource of modern civilization: money. And if you think this won't affect your life, that you can simply ignore it and continue living normally, you're radically underestimating how much control over money means control over everything. Because in the end, everything in modern life depends on money, and whoever controls your money controls you.